Hi there, Serial Trader here. Let's check in with the major US indices as we look toward the coming trading week. We'll start off here with the wave chart of SPX. Alright, so just to review a bit, definitely looks like we have a nice clean 1, 2, 3, 4, 5 waves down from the all-time high. And at this point, quite confident that we do have the fifth wave pivot in place, and now we're working some sort of upward corrective retracement. And just this chart's a little busy on this time frame, but when I drop it down, it should be a little clearer. So just this overall initial decline from top to bottom, the fib retracement levels for that. So we have the 50% retracement, which we didn't get too far away from on Friday before coming down a bit. That comes in at 27.72.23. And then the 618 retracement comes in at 28.12.03. So those are the two retracement levels I have on the chart to be watching. And with that being said, we're going to go into the hourly price chart and just look at the little short-term price action here. So from the bottom, looks like we have a fairly clean 1, 2, 3, 4, 5 up for possibly a wave A. And I like that we have a nice 5 off the bottom. That makes it quite confident that there is a significant pivot here. Not that this bottom's likely to hold over a longer time period, but just on this current time frame, looks like we have a 5 up. Now we're possibly starting to work a 3 down. So we got 5 up for A potentially in place. Now we're working maybe an A down, B up, then we'll have a C down, ideally into this Fibonacci pocket here, which is just the overall retracement of this currently labeled A wave up, okay? And we have the 50% retracement at 26.80, and then the 618 at 26.62. But technically anything up to and including the actual low at 26.04 would be acceptable if we were going to have an A up, B down, and come up again in C. Now, there's this nice price gap from last week. That would just be ideal to come down, close the gap, ABC down to close the gap, hit one of these fib levels, get into the fib pocket here perhaps, and then reverse and do another 5 up in wave C, and then maybe hit the 618 retracement of that overall decline for, you know, what could either be a larger wave 2 or wave B. And then at that point, really set up for a nice short play for that next big impulse wave down. But right now, I think the play here is wait for the retracement, wait for the retest here, have it find some support, ideally close the gap, hit the fib level, start reversing, and then certainly tradable to try and trade this C wave up if that's how it materializes. Because, I mean, that'll be a, you know, over 100, maybe almost 200 point move. Certainly worth trading. And then once we get up into this resistance level, I'll go back to the maybe the daily chart. Once we get back up into this resistance zone and say we have a nice overall ABC up from the bottom, hit near the 618, that sort of thing, start reversing, get a sell signal, perhaps a candlestick daily sell signal. That'll be a fantastic shorting opportunity. But right now, wait for this wait for this little pullback after our initial 5 up, and then maybe try and position for the C wave up. That should be a decent trade should it play out. Now, if we've already done our bounce up and we're just heading straight down, we're going to make new lows right away. If we do take out the low, that's probably, I mean, it's not really great entering at quote unquote the bottom, but in this case, I think if we actually just take out this wave 5 low right away, we're probably going a lot lower and in a big hurry. So it might be kind of a chasing type of trade, but I suspect there'll be significant follow through when this level gets taken out. And I suspect we'd at least go down at bare minimum to test the February low, that A wave low of the triangle, which came in at 25.32, so close to 2,500. So if you broke basically if you break 2,600, you're probably looking to at least test that 2,500 level in short order. So 100 point move or more, could be a lot more if we really get panicky, but so that's something to watch for. But definitely still favoring the way I have it illustrated here with just a little pullback, higher low, and then we go up in a wave C. That's my preferred outlook at this point in time. Of course, if the market decides that's not the way it's going, then have to change our mind there. But currently, that's what I'm looking for. All right, so well, that's probably good for the wave chart for now. And we'll go over the Thinkorswim candlestick chart. So from a candlestick perspective, and with our moving averages, Friday wasn't technically a sell signal. It looked like it was going to be. It was starting to do a bearish engulfing. It looked like it was going to close below the T-line, but then there was enough of a recovery towards the end of the session that we didn't really have a signal at all. Just a red day, but not an actual sell signal. It still closed above the T-line and above the 3T line. So not really any technical damage done there from a candlestick perspective. We're not overbought on the oscillator yet, so we certainly have more upside as far as that's concerned. Interesting that this falling 20-day simple moving average seems to be providing some resistance, at least on Friday it was. And we haven't even come up to test the 200-day simple moving average as resistance yet. So you'd think that would be a fairly likely level to test, and then, at least test it then fail. To not even get there and test it, that seems kind of unusual. All right, so that's the daily for SPX. Weekly, we just had a bit of a recovery, but basically just an inside bar. The real body of this candle stayed within the real body of the previous week's candle, which was weekly bearish engulfing. So not really a clear signal here, other than a long lower shadow rejecting the lower prices, at least for now. Weekly oscillator here, basically oversold or nearly oversold at a similar level to where it was over here, where we found good support. Although don't think that this means we have a significant bottom in place. It doesn't. And the T line, the weekly T line, we haven't even come up to test the weekly T line as resistance, which I believe it will serve as. So still looking quite bearish here on the weekly candlestick chart. All short-term bullishness aside. And the monthly chart, I think we had a look at this already, but just to have a quick peek, we definitely have a confirmed monthly bearish engulfing candlestick, engulfing two prior candles, and currently the monthly T-line is serving as resistance, so that's not very bullish there on the monthly. And you see this monthly oscillator just starting to come off the overbought condition and nowhere near oversold, so keeping an eye on that one. Okay, that's good for SPX. We'll move on to the Dow Jones Industrial Average. So anything significant here on the Dow here for the daily? So yeah, the Dow has already come into its 50% retracement zone, and so far rejecting from that area quite nicely on Friday. Although I would imagine if the S&P does, an ABC up, the Dow will probably do a similar thing. So the next retracement level of this overall decline to be looking for is a 618, and that comes in at 25,871 on the Dow. And the 200-day moving average not showing as much of a problem for the Dow as it is for the S&P. We're already back above it, whereas in the S&P we're not really close to it yet. And Dow, the oscillator here, not overbought yet, so there could still be more upside here in this bounce off the bottom. All right, we'll go to the NASDAQ Composite. And okay, let's have a look here. So NASDAQ Composite, nice 5 waves down off the bottom, of course. We have the 50%, the 618 retracement levels here. So far, the NASDAQ also finding some resistance on its falling 20-day simple moving average. Haven't even come up to test that 200-day moving average as resistance yet, which if we did would be right around the 50% retracement level. Oscillator's not in overbought condition yet, so we could still go higher. Daily candlestick, not a clear signal, and we're still above the T line and the 3T line, so nothing overly concerning there yet. Although definitely favoring a little move down before popping up in a wave C if it's going to go the same path as the S&P, which it likely will. All the indices seem fairly correlated at the moment. They're showing basically the same patterns. Anything weekly on the NASDAQ worth noting here? Let's have a look. No, it's basically the same as the S&P, and we haven't even come up to test the weekly T-line. And actually, the weekly 50-week simple moving average is now serving as some resistance, which obviously isn't a very bullish thing. Should be serving as support if things are bullish, right? And weekly oscillator looks like it's a little bit in the oversold condition, maybe starting to cool off a bit as we have our corrective wave up here. Okay, and the monthly, let's have a look here. Oh, get back to it. Okay, the monthly. Yeah, so monthly bearish engulfing, oh, I believe 3 prior candles. No, sorry, 4 prior candles. So yeah, 1, 2, 3, 4. So a 4 candle monthly bearish engulfing on the NASDAQ. So that's more powerful than the other 2 indices. And looks like we're just finding some resistance on the monthly T line at the moment. And that monthly 3 T line, with another reasonably negative month, we're going to cross below. So that'll be kind of a bear cross on that. And yes, the monthly oscillator nowhere near the oversold condition. In fact, just coming off overbought conditions. So NASDAQ looking like it's got a lot of bearish potential. Any short-term bullishness aside in this bounce we're doing. Okay, that's the NASDAQ. Just quickly go back to the Dow and do the weekly and monthly since I forgot to do that. So the weekly on the Dow, now there's no clear signal here. Just Dow rejecting the weekly T-line as resistance so far. This isn't, a buy signal per se. Just a long lower shadow, kind of an inside bar again. All right, and monthly for the Dow. Okay, monthly, the Dow is slightly hanging above its monthly T-line, although it looks like it's in danger of breaking it. The Dow did do a bearish engulfing candlestick engulfing 2 prior months, so still a legitimate sell signal. And the oscillator just starting to come off the overbought condition after doing a bearish divergence. So we were actually more overbought on the oscillator here, even though prices made a new peak. The oscillator did not, so that's a nice bearish divergence. And implying, more negative trading to come here on a monthly basis. Okay, yeah, we're done with the Dow. Go to the VIX now. And on the VIX, let's see what we have here. So the VIX pulling back as equities do their corrective rally. But so far, making a higher low above the low we had here on the last bounce on the equities, which was at 1706, so basically 17. So far, the VIX has made a higher low at 1805, so around 18. So VIX still technically in an uptrend. We did make a lower high, but now we have a higher low. We'll see if VIX gives us any early signals. If we can get a little bit more of a rally on the indices, coming to those fib retracement zones I'm looking at. And then if VIX can start, at least on a shorter time frame, trending up, that might be a good complementary signal to go short on the indices there. All right, should be an interesting week. I imagine we'll just develop this corrective rally further, or we'll just come straight down in, the most doom and gloom scenario and just get at it right away. But definitely still favoring a little more short-term upside after coming down, filling the gap, and then, maybe going back up one more time. But we'll see what happens. All right, check in later in the week. Serial Trader signing off.